Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about SOBHA developers. Can it be accumulated at these elevated levels or one should avoid it? So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about SOBHA developers, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. You also ask me questions and ink out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up on short-term, long-term call on stocks. And also you can ask me any queries, any number of queries every day if you get that membership. And if you pay $100 upfront, that you get 1 year access by paying for 10 months, so that's a 20% discount. For detailed market or company talk or a number of stocks you're holding, you can directly email me and we can work things out with a fee. Now about the company, SOBHA Developers was established in 1990 and they provide infrastructure and real estate services. It is one of the most renowned companies in India and most of you must be knowing about it. It claims to be the fastest growing property company here in India, and it deals in high-end property construction across the nation. So they are into selling high-end properties which are in multi-crores, etc., and to high net worth individuals. Strong business fundamentals, and they have done exceedingly well even in difficult circumstances. The market cap of the company has swelled to around 7,000 crores already. If you look at the financials, then these are Q1 FY22 versus FY21 numbers. So these are June quarter numbers that have just passed by. The sales went up by around 46%, and there has been a profit jump of around 55% year on year. You would remember that last year the June quarter had been a washout, and that has led to a better numbers that has come out this time around. It looks optically much better, but even if you take out the lower base, the numbers look pretty good. Reasonable debt, but there will be debt with real estate companies that you would understand. Return on equity of around 12%, operating profit margin of 13% is pretty good when you consider that these companies carry a lot of debt and there is a lot of working capital that needs to be worked on. Plus, there's a high gestation period for the money that is coming into the company after a project is completed. It takes a lot of time for the completion of the project, etc. So these are not FMCG kind of companies. So ROEs and operating profit margins would at best be in mid teens, or you can say mid double digits. So these are decent numbers in terms of return ratios. If you look at the performance, the stock has done exceedingly well in the last year. In fact, it has gone up by 3x over the last 12 months, from 250 to 750. In fact, 750, 770 was the high that it made, around 800. High promoter and institutional holding with only 18% free float is also a huge positive. The concern is high debt, but I'm not that concerned at the moment because of the project execution that the company is doing. Company is doing pretty well on the execution front, so debt will always be there. Yes, it would be much better if they reduce the debt a little bit by 10 to 15%. That would be an icing on the cake, but they are doing pretty well on the execution front, on the sales front, and we are seeing that in the numbers on the top line and the bottom line. So numbers should improve as things open up even further. I'm pretty confident that from FY23 onwards, all these travel companies, real estate and economy related companies should end up doing well, and that is why there is a greater buzz for companies which are related to construction, home improvement, home appliances, cement, real estate, infrastructure, because they have been bruised and battered over the last 2 years. First, we had the first wave of 2020, and then we had this huge wave of April 2021 as well. I think with the high number of vaccination that is going on, things are only going to improve going forward. One of the best property companies along with Godrej Properties. This is regarded as one of the best. Then there is Prestige Estate as well. But these two three companies are pretty good fundamentally to buy into on declines. If you look at the technicals, it looks really good technically also. Over the last 3-4 weeks, it has risen a lot, and we have seen that in the technical charts and technical parlance. So there is strong support that lie between 550 600. In fact, 500 to 600 was a huge resistance that the stock was not able to, you can say, take out over the last 2-3 years. But now that that taken out, it has gone to 800 level. So any dip towards 650, 630, 670 would be very good buying opportunity. May consolidate for a while because it has risen sharply over the last few weeks, and there is heavy up move expected above 850, but I feel that it will take a little bit of time, at least 2-3 weeks, before 850 880 is taken out with earnest and another up move take place. So this consolidation may help new investors to probably get into the stock slowly. So it's a good buy on dips kind of a stock from a 2 to 3 year time frame. So what needs to be done? In my opinion, one should look to either avoid it. If you have not bought it, don't buy at these elevated levels. I would say that you wait for levels closer to 600 to buy into, or even better around 550, 520 to buy into. Now that may or may not come. So you have to take your own call. The issue that is happening at the moment in the market is that the stocks are extremely expensive, all stocks. So if somebody wants to buy a fresh from a long term point of view, it is extremely hard to find something. And the same goes with these real estate companies. But yes, if you have 5+ year time frame, yes, these are levels where you can get into. You should not hope for huge returns over 2-3 months. There could be a chance that you'll be down 10 to 15% over the next 2-3 months, and that is why I'm saying that if you have not bought, then avoid at these levels. But if you can take that 15% hit on your portfolio, this is a very good stock to buy into. Buy some here and buy more around 550 600 if you get an opportunity. Average it out and hold 4-5 years will give you magnificent returns, because I believe that real estate, infrastructure, cement, etc., they have not done well. I'm not saying that they are going to be huge multi-baggers or something drastically is changing in that front economically, but with the lower base and whatever that has gone on over the last 2-3 years, in fact over the last 4 years, even before the pandemic, I think things are only looking up for these sectors. Have at least a 3 year view. Those who are holding at 500 550 levels, holding from lower levels, keep on holding it. I see 1,000 coming in the next year or so, and even larger targets over the next 3 to 5 years. It is a top company in a promising sector, and that is why I have come up with this video. Otherwise I would have made a video on some other stock, but these are some of the best real estate companies. Very few companies in the real estate sectors are of this quality, and Sobha is one of them. So this was my video on Sobha Developers. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thank you.